Hi, and welcome to Arizona Mortgage News Update. I'm Mike Goblet, your Arizona Mortgage Guru. Well, it's been a week since my last update, and there's been an awful lot happening in the world and then in the financial sector. First of all, let me put out a salute to our Navy's SEAL Team Number 6 for taking out not only America's public enemy number one, but the world's public enemy number one with Osama bin Laden. Job well done, guys. But let's talk about the financial situation. What's been happening with mortgage rates? Well, the headline yesterday was the benchmark 30-year mortgage rate matches the 2011 lows. And they are right. We are there. With 2011, we're back to the lows of the year. As a matter of fact, some pricing today has indicated we may even have bettered that benchmark. Now, the headline talked about the 30-year fixed rate being down to 4.71%, and the 30-year being at 3.89%. Now, a little more reading into that headline, it says to obtain these rates, the fixed rate mortgages require a payment of 0.7 of 1 point in order to get that rate. Well, that part isn't necessarily true. Let me tell you that our best lender's pricing right now, I could be doing for you a 30-year fixed rate mortgage at 4.625 with no discount point and no origination fee. A 15-year at 3.75% with no origination fee or discount point. It really ties to what's your loan amount, what are your credit scores, and some other variables. So if these numbers have interest to you, give me a call about these because they're even better than what the headline is reading. So we know we're at the year's lows, but where are we going from here? Well, there's a lot of activity over the next few weeks that could dictate what's going to happen with mortgage rates. Coming June 1st, the Fed will stop its QE2 program. Now, that is the program that the Federal Reserve has been doing in terms of buying treasuries to help keep rates low. And a lot of people who aren't enamored with this really believe that this will have an impact on raising rates. Now, treasuries are not exactly mortgage-backed securities, but they tie to each other and correspond relatively. Others of this program that are watching it point back to last year where the Treasury was buying mortgage-backed securities in a very large volume, the number one buyer, and when they stopped, the prediction was rates were going to go up. Reality was rates went up a little bit at the beginning, but then came back down because outside investors, principally foreign investors, came in and bought those debts because they felt they're still good, secure items to buy. So there's the other side of the coin that's saying even with the end of QE2, rates won't necessarily rise or there won't be a dramatic impact because of other potential investors stepping in. What are the other impacts that will affect us in the next couple of weeks? Well, number one could be our own government tripping over itself if they refuse to raise the debt ceiling and we end up defaulting on our own debt. That will have bad financial consequences for mortgage rates and a lot of other financial situations. So let's hope and pray that our Congress and everybody can get together, come to some kind of agreement in order to move forward with our political program that way. Third real impact is inflation and where we're going with that. In a very surprise move yesterday, the European Central Bank did not raise their rates as was being projected. They're very concerned about interest, or not interest, but inflation that's happening in Europe, but they didn't raise their rates because of the slow economy that's happening over there. This obviously ties directly to what our Fed has been doing and saying as well, that while they're concerned about inflation over the long run, right now it's more important to ensure that we keep rates low, money flowing, and focus on that rather than the inflation of the future for today. And the European Central Bank reflected the same thing. But if inflation heats up, and if it gets too bad, that again will have a very negative impact. So I would think that at least for the next couple of weeks, barring unforeseen circumstances, rates ought to hold pretty steady to where they are. They're going to fluctuate a little up and maybe a little down. The ballpark, they should be about where they are at least through the month. If you want to take advantage right now of these year's lowest rates, don't forget, like I said, 30-year fixed, 4.625, no origination fee, no discount point on a 30-year. So give me a call. I'm Mike Goblet at United Mortgage Financial Group. Phone number here is 480-503-3533. Look forward to hearing from you and stopping back so we can talk a little bit more about what's going to happen in the future. Thanks for stopping by.